Imagine this. You're strolling along the Yarra River here in Melbourne. The sun's out 1 minute, then bam, a sudden storm rolls in, whipping everything into chaos. That's exactly what the crypto market's like right now. Not the predictable drizzle, but a full on gale that's caught everyone off guard. And as someone who's weathered plenty of these from my spot right here in Melbourne, I can tell you this one's got a uniquely Aussie twist that's not being talked about enough. G'day everyone, it's Sash from CRYPTOLOGIC, your straight shooting guide to Bitcoin and crypto with a focus on what matters down under. Today, we are not just recapping the headlines, we're unpacking how this global crash intersects with our local scene, throwing the AI trading strategies you can actually use, and giving you tools to add real value to your crypto journey. Let's dive in. First thing is first, the numbers don't lie, and they're brutal. As of right now, Bitcoin's trading at approximately 95,000 AUD or 63 USD. That's after dipping as low as around 90,000 AUD earlier today, marking one of the sharpest one-day drops in years. Over 10% wiped out in hours. Globally, the entire crypto markets shed about 2 trillion since October peaks, with another 800 billion gone just last month. If you're feeling the pinch, you're not alone. This segment is brought to you by cryptologic.com.au, your go-to hub for in-depth Aussie and global crypto news. Check them out for more on these stories. Now, let's zoom in on the local front because while the world panics, Australia's got its own storm brewing that's flying under the radar on most of the information platforms. ASIC, our top regulator, just dropped their 2026 annual report flagging digital assets as a massive risk area. They're talking regulatory gaps, unlicensed platforms, and AI-driven scams as priorities. This isn't just talk. Remember the 14 million fine slapped on the Gold Coast firm for misleading coin crypto conduct? That's the kind of enforcement ramping up. And get this, Gemini, the big UX exchange run by Winklevoss twins, is straight up exiting Australia. Gone. They didn't last long. It's only been months. They're slashing jobs globally and closing accounts here by April, citing the crypto slump and tighter regs. Add to that ongoing debanking drama, Coinbase accusing our big four banks of unlawfully blocking crypto firms. For us Aussies, this means fewer options, but also a push towards more compliant local exchanges like Independent Reserve, SwiftX, and my favorite CoinSpot. If you're in Melbourne like me, think about how this hits home. Local meetups are buzzing about it, with folks shifting to self-custody wallets to dodge bank hassles. But here's where we differ from the pack. Let's connect the dots. This regulatory heat isn't all bad. It could legitimize crypto here, making it easier for super funds to dip in via tokenization. Speaking of which, Australia is leading in real-world asset tokenization. Think property or commodities on blockchain. With the crash, we're seeing bargains for tokenized assets, but watch for AFS license requirements coming soon. Now, shifting gears to the global madness, 3 key stories you won't hear framed this way elsewhere. First, Bitcoin's plunged below 60,000 USD, briefly triggering over 1 billion in liquidations. Its capitulation city with weak hands folding. Second, miners are hurting bad. Firms like CleanSpark and Mara Holdings are down 19 to 20%, with Bitcoin's halving effects biting harder in this low price environment. Power costs in places like Texas are skyrocketing, forcing shutdowns. Third, institutional flip-flop. BlackRock's ETF hit record outflows, but JP Morgan's saying Bitcoin's long-term case against gold is strengthening. Amid broader tech sell-offs and macro fears, crypto is getting lumped in. But history shows these resets lead to stronger bulls. Now for that value add that sets CryptoLogic apart, let's talk AI in crypto trading, tailored for Aussies in this mess. Most hype AI vaguely, but here's actionable insight. Use tools like TradingView with AI indicators or platforms like TensorTrade for back testing strategies. For example, during crashes like this, train a simple ML model on historical data to spot reversal patterns, focus on RSI, divergences below 30. In Australia, pair this with local data from CommSec or even ASX listed crypto ETFs to avoid forex fees. Here's a step-by-step. Number 1, grab free API from CoinGecko. Number 2, use Python's Scikit Learn for sentiment analysis on X posts. Number 3, set alerts for when AI flags a buy signal amid regs like ASICs. This isn't plug and play. Test on paper first adds edge without the hype. All right. After all that intensity, let's lighten up. Here's today's joke. Why is Bitcoin like a kangaroo in Melbourne traffic? It hops to insane heights, but can crash spectacularly if it misjudges the road. Yeah, keep an eye on those support levels, mates. Wrapping up with the CryptoLogic takeaway. This crash is a brutal reset, but for Aussies, it's a chance to build resilient portfolios. Lean into local regs for safety, use AI for smarter trades, and remember, tokenization could boom post-slump. That said, I'm not a financial advisor. This is not advice. Always DYOR, diversify, and only risk what you can lose. If this added value from the unique Aussie lens to practical AI tips, hit subscribe, smash like, and comment below. What's your go-to strategy in a crash? Share with a mate stressing their wallet. Until next time, stay sovereign and savvy. This is Sash from CRYPTOLOGIC. Cheers from Melbourne, and I'll catch you in the blockchain.